Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news ahead of the Wall Street Open. Coming up, Powell on deck. Investors eye Fed Chair Jerome Powell for hints on the future rate path. He speaks in Washington later today. And Lyft, its Q3 gross bookings growth underperforming Uber. Its share is currently flat. It's an all-session stock, but one stock that is all-session that is tracking higher is Disney. After its earnings, Disney's boss says that the House of Mouse is now in a building phase again. A very warm welcome to you to this new edition of Beat the Street. Not long now before Wall Street starts trading, it has to be said that investors are looking for direction at the moment. Just checking on the Wall Street for you, which mirrors the Dow Jones Industrials. As you can see there, on the one-day chart, not much of a move there. Just checking in on some breaking news that's just come in. Initial jobless claims. We were expecting 218,000. We got 217,000. No change from the previous month. And this also comes in a time when the labor market in the US continues to show few signs of a significant slowdown. Of course, all this comes ahead of JP's speech later today. There's not been very much of a reaction on the markets because it came in pretty much in line with expectations. Just checking on the VIX for you as well. The volatility index there, 15.74, pretty much where it was before those breaking numbers. Also, the other thing that has to be said is investors are keeping an eye out on those US Treasury yields that have retreated sharply since the benchmark 10-year Treasury note topped 5% in late October. And just showing you the US 500 as well, because markets have come back from October with the S&P 500 and the NASDAQ notching the longest streak of gains in 2 years. Now, speaking on about that, we have also quite a few earnings to look out for. Prior to that, one of them, which provides plenty of trading opportunities for investors, is after a positive outlook from Uber. Lyft is the latest report. Jeremy Naylor has been digesting those numbers for us. Jeremy, why are the shares currently treading water?
Well, the bottom line is that it disappointed investors late last night, and this can be seen quite clearly from the IG platform where we saw shares drop going into the extended trade late last night. Let's take a look at the numbers as we saw them break last night. The group reported a loss of 3 cents a share to be compared with expectations for 15 cents profit. Revenue marginally higher than forecast at 1.16 billion. Gross bookings, well, now they were up 15%. This looks pretty good to just over 3.5 billion, but this growth was lower than Uber's recent numbers. Lyft forecasts current quarter adjusted core profit, a key profitability metric closely watched by investors, of $50 million to $60 million. Now, that was higher than expected. Now, one analysts and investors believe Lyft will maintain its position as the second largest ride-hailing platform. It commands something like around about 29% of the market. Those analysts said that the company is more susceptible to economic uncertainty. And oh boy, have we got that. Let's take a look at the chart because you can see all sessions on the IG platform. It's down for a second day in a row. This red candle we see here on the far right hand side is as a direct result of the earnings last night. I want to show you the hourly chart just to show you where it produced those figures, and you can see the volatility in this candle here with the long wicks that we had. It did actually rise at one point, and as you said, things looking pretty good on one aspect of it. Revenues were up at a pretty good level, but broadly speaking, it has problems earning money out of that. It's been cutting prices to try and get market share, and this has meant that margins have shrunk. Now you can see going into today's trade, all sessions on the IG platform, it's now expected to open at something like around about $10.32. So we're down around about 4%, 4% on from the cash close last night. Let's go back to the daily chart because I think the long-term picture is really interesting. This is taking it right the way back to the very genesis of when it became a listed company, all the way back in the end of March 2019. This blue dotted line at the top here was the IPO price at $72. And you can see where we are now. at just $10.32. There's been a massive destruction of value for this company, for investors. And it's really all about the fact that they've been finding it tough. First of all, tough in the environment. Second thing is up against Uber, which is taking market share, and it is managing to operate on a more efficient basis. As I said, it's not really able to catch up. It's only got a 29% market share. It's trying to cut prices to get more people through the doors of their cabs, but that's eating into margins and that's causing all sorts of problems. And this is a channel we've got here opening up. If you're short on this, your stop goes above the line of this upside of the channel, so you'll stop at around about the 120 level. Sorry, did I say 120? Yeah, around about the 120 level. That's $11.20. We're currently trading at $10.31. You've got support down here at around about 860, and that would be the bottom of this channel. I think whichever way you cut it, Angeline, numbers out last night did nothing to support the stock in the longer term. I want to find out more about what's happening under the covers here. It is producing what looks like a better fourth quarter at the moment in terms of where it is, but it's all very well getting revenue through the door. It's a question of making money.
That's exactly right. And whilst Uber is the bigger name in the industry, as you mentioned earlier, competition is fierce. And Lyft has been trying to make its prices a bit more attractive to get people through the door. Now, Walt Disney is another all-session stock, and it is tracking higher as I speak, striking a positive note with investors. High attendance reported at its Shanghai and Hong Kong theme parks, which then offset a fall in advertising revenue at ABC. Earnings coming in at 82 cents a share, to be compared with the 30 cents recorded last year and 11 cents higher than analysts' forecasts. Revenue, though, narrowly missed forecasts. Now, Disney had nearly 7 million Disney Plus streaming subscribers in the quarter. Disney Plus and Disney Plus Hotstar together boast 150 million subscribers. This is ahead of an estimate of 147.4 million. Disney's entertainment unit, which regroups TV networks, film studios, and Disney Plus and Hulu services, also posted an operating profit of $236 million compared with losses a year ago. Operating income of the experiences segment, that's the theme parks and resorts and cruise lines and consumer products, rose 31% to $1.8 billion. Now, following this set of results, Bob Iger highlighted the significant progress made since his come back to the helm of the group, adding that while they still have work to do, these efforts have allowed Disney to move beyond this period of fixing and to a phase where they are building the business again. Disney now says it is on track to achieve $7.5 billion in annualized savings as it aggressively manages costs, and the company plans to reinstate a dividend payment to shareholders by the end of 2023. But if you look at my chart here, it still has a way to go before it gets back to the heady highs seen in February 2023, where it topped 12,235 there. Now, just checking in on another stock that is fascinating. In fact, the whole sector is fascinating. This is Eli Lilly. Its shares, we're watching that at the moment because Eli Lilly, not an all-session stock, but you can trade it on the IG platform. Its shares are expected to head higher after it got the green light from the US and also the UK for its weight loss treatment. Eli Lilly, according to the National Health Service here in Britain, they say that the new weight loss treatment has the potential to benefit thousands of obese Britons. And this could save the NHS billions of pounds. And it could also pave the way for a new powerful new rival to Novo Nordisk's Wegovy in addressing record obesity rates. Just showing you Novo Nordisk there, which is an ADR. However, it has to be said that no one knows the long-term health risks yet. Also wanted to show you Warner Brothers Discovery here because look at that share price, that red candle there. After the media and entertainment conglomerate said Hollywood strikes and a weak advertising market could hurt its earnings next year, its shares fell more than 19%, just showing you the reaction there. And Take-Two Interactive Software is another one that you can trade on the IG platform. When it starts going, Take-Two Interactive Software jumped after the company said it would release a trailer early next month for the latest installment in its best-selling Grand Theft Auto video game franchise. Now to oil prices, and both benchmarks have fallen to their lowest levels since mid-July. Let's just have a look at crude for you. This is US crude there, as you can see. We've seen this steady trek down from the 9402 level seen not too long ago. And this is partly because the easing, or rather the concerns around the Middle East are easing these over the disruptions caused by the unrest in the Middle East. But replacing this are worries about weakening demand from China and the US. We've also had data recently out of China suggesting the fight against disinflation remains a challenge there. IG Sean Morrison has been trying to cut through the noise by looking at the technicals for us.
The price of Brent crude has been declining and has now moved below that 200-day simple moving average, suggesting that that long-term trend is now sideways rather than up. Doesn't necessarily mean a new downtrend. And certainly we do have a bit of a correction of a downtrend in the short term, but longer term, still looking at trading between the levels on Brent crude, where before we were looking at keeping a long bias to trades. Now, movement lower. There's been higher US inventory levels, slowing demand expectations, mixed data out of China. There's been numerous reasons for the short-term decline in oil, but it is trading below the levels we saw at the start of the conflict between Israel and Palestine at this point in time. And there certainly are still risks to the upside if we do see some contagion or certainly escalation cross-border into the Middle East. So for now, I'm looking for a bullish reversal closer towards a level of support, that initial support being at 78.50 before looking for long entry from current levels. I want to see a reversal for me. We see today's candle, this green candle closing above the halfway mark of that preceding candle, just as we've erased most of the previous day's gains before looking for a long entry. And then levels on the upside, 81.60 and possibly 83. That's dollars per barrel. If we do not materialize a bullish reversal, instead we see the price starting to trade below the 78.50, probably look at maybe that next level of support being at about $77 per barrel, and might be looking for a bullish reversal off of there before looking for long entry. My price might have retraced a little bit too much to chase it to the downside right now. I want to see at least a rebound from oversold territory.
Thanks very much, Sean. Just showing you my chart there. Brent there down some 16% since the level last seen here, September 28th. OPEC also, we're waiting on that because OPEC is set to discuss its output policy for next year later this month. Now, just before we go, just a reminder that the recent jobs numbers that we saw earlier showed that the US labor market still continues to be relatively robust. And we're waiting on Fed Chair Jerome Powell to speak later on for any indication as to where rates might head. Well, earlier we spoke to Chris Versace, Tematica CIO, and I began by asking him whether he saw a springtime cut.
Will there or won't there be a springtime rate cut from the Federal Reserve? The next data point to watch, the October CPI report out next week. If we see big progress, the market's going to think, yes, that spring rate cut is on the table.
And that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @Angeline Ong on Twitter. Until then, this is IGTV.